Hey everyone, how's it going? In this quick video, I want to go over kind of my style of trading, what I look for, and how I identify it and do my analysis. Okay, I have a lot of people asking me about how I do chart work, what I'm looking for on the chart. So I figured I'd make a quick video about how I identify them and what made me go with this style. Okay, so let's look at this overall picture of dollar CAD. Okay, this is a weekly weekly chart. So what I'm looking for is very simple, and you probably hear this over and over again, but let me really break it down as simple. All I'm looking for is the market to be forming a consolidation. Okay, why? Because I understand how the market moves. Okay, how the market moves is very simple. You're going to have a strong move, which is what people always call impulse. You have this consolidation, correction, whatever people want to call it. This is a correction nevertheless, and you're looking for this next impulse. Okay, it literally just means you have an impulse, you have a correction, you have an impulse. Okay, I'm sure you hear a lot of people talk about this. I'm sure you've seen videos or people analyzing or elaborate on this, but it's really just that simple. Okay, don't think too much about it. Um, you're just going to see this kind of structure over and over and over again. Any market, any pair, anything, as long as it's a market. Why? Because that is the nature of market. That is just how the price moves, right? Forget about support resistance, forget about indicators, forget about everything else that people generally use. Okay, I'm not saying they don't work or anything. I'm simply saying that the way how I trade, based on my experience, based on my journaling, based on my past experience, um, I realized that that is how the market moves. Okay, let's go down to daily chart. I'm just gonna break it down this a little bit easier. So just looking at this price action right here, right? So what are we seeing here? It's very simple. We are looking for this correction right here, right? This is a pretty strong impulse. So naturally, when you have this kind of a strong impulse, you're expecting a longer period of consolidation, which is exactly what happened here. And once the consolidation finishes, you're going to have another impulse. Okay? So looking at just on the daily chart, you understand that this is what's happening. Okay, yeah, one, two, three, yeah, it looks simple enough. But what traders or novice trader lose money in the market is because they don't understand. They're trading when it's in this consolidation. I'm not saying you shouldn't trade or anything. You're sure there's setups here that you can buy, there's setups here you can sell, whatever the case. Sure. But when you look at the higher time frame, when you look at multi time frame analysis, you understand that a strong impulse like this requires a large amount of time for a correction to complete before the next impulse, right? So, however, you have to understand that as a trader, we never understand or we never fully know when this correction will over, right? We can have pretty good idea that where the price goes to the top, where the price goes to the top is likely to finish. But as you can see, there's a couple times it drops, a couple times it drops, it always rebounds back because the correction is not finished, right? We can do our forecasting, we can try to predict that the correction is finished, but we also have to pay close attention that price can easily come up again, right? And then for another correction to go up again until at the top when this correction is over, and we're going to see this drop. Okay? And let's just look a little bit deeper into this piece of the impulse right here, okay? Because you have to understand how multi-time frame analysis work. All right, we're looking at the daily chart, we're looking at the weekly chart. We understand that that's the nature of market. We understand one, two, three. We understand correction. Yes, but how to capitalize on the trade like this, right? This is what multi-time frame analysis comes in. This is what intraday charts and lower time frame comes in. Okay, so let me zoom back all the way to where we were. And this is key right here, and how to be a better trader is to understand that multi-time frame analysis is going to open up your eye on how trading works. Okay, earlier we're on the weekly and daily, which is a higher time frame. We understand 1, 2, 3. We understand this is a larger correction. So how to capitalize it and get the best risk reward? Go down to lower time frame, and you're gonna see more of this kind of structure. We see on a higher time frame the correction. If you go down to the 4-hour chart, you look at this and you understand. Oh, we have an impulse, we have a correction, impulse, correction, impulse, correction, and impulse. So you understand that in one higher time frame impulse, you're going to have multiple of impulse correction, impulse correction, impulse and correction. Okay? So to capitalize fully is to understand that when you're looking at the higher time frame, you understand that the pattern is about to complete because based on your analysis, based on your chart work, you understand that this is a high probable risk reward trade. So you're looking for opportunities on the top, right? And when you go down to the 4-hour chart, when you see these opportunities, when you see prices forming that impulse correction, you're going to want to get entered. You always want to get in. So it's to look for setups on the lower time frame as long as it validates the higher time frame direction. Okay, so let me repeat that again. It is all about making a higher time frame prediction or forecasting and to go down to the lower time frame to look for opportunities. Okay, because simply to put simply to enter a trade from the top with a couple hundred pips, it is really not it really doesn't make sense. Okay, yes, for some swing trading, for some people who are just looking for long-term investment, yes, okay, but for us as a trader to have a 300 pip stop loss aiming for a 3 to 1 after a 1,000 pip move does not make sense. Okay, and this is why going down to the lower time frame, excuse me, going down to the lower time frame, we're looking for the same kind of continuation correction, right? And look for that continuation correction because price is likely to continue lower based on your chart work and based on your higher time frame direction. Okay, so we're looking at this 4-hour chart right here. I say this is a correction right here, but I'm waiting for the first impulse and then the next correction, right? So we clearly see that this is a correction. Let me take this out. This is a correction right here, right? And if you put an entry somewhere like this, covering the top, which is very, very, very reasonable, right? And you're looking for a shorter pip stop. Now you're just looking your risk rewards pretty much double, right? That's just on the 4-hour chart, right? If you're even looking into the 1-hour chart or lower time frame, um, you can have even a tighter stop loss and you can have maximized risk reward trade down there. Okay, so to take away from this video, I just want to mention once again that this is how I trade. This is by no means the best or the way you must trade, but I've been trading for many, many years, and I have traded different kind of strategies and style back in the days where it is somewhat still profitable for me. It is still somewhat working, but I just fine tune my trading plan and analysis to this level where I understand that in order to maximize a potential, I'm looking for the next impulse, right? I'm looking for a big correction to finish, and I'm looking to get in for that next impulse. Okay, so thank you very much for tuning to this video. I will continue to make these kind of educational content throughout the days and throughout the years. So I hope you like the video. I hope you like it. Uh, Follow it, comment, and share the video if you like. And I will continue to create these videos, and I will see you next time. Thank you.